If you're a crypto investor right now, you're probably looking at this chart over here and you're asking yourself two questions. The first question that you're asking is this pump real and is it going to last? And are we going to get dumped back into the 87,500? And the next question that you're asking is this pump real enough that we can actually start buying into this crypto market? And I guarantee you that today, if you give me 20 minutes, I'll give you the answer to both those questions. And I'll back it up using actual data. I'll show you whether the data shows that this pump is real, or whether this pump is not real, and it'll actually show you when or whether it is safe to actually start buying. So it's a big show today, and we're doing the show on the background of an amazing market. It feels like the market has completely changed. But feeling is not enough. We need the feeling to be supported by the data. And that's what I want to check with you today. I want to show you whether the feeling that the market has changed is substantiated by data that the market's changed. So it's going to be a big show back, second time back in the studio in 2026. Let's have some fun, guys. Wakey, rise and shine. It's a beautiful, I want to say a beautiful green day. We haven't had one of these beautiful green days for so long. It feels like someone, I'm actually reading a chat group that I'm following here, and one of the guys in the chat group actually said, you probably know him, his name's Johnny, says, Bitcoin 6 green days in a row. Not going to lie, it actually feels quite nice. And it's true, it actually feels quite nice, but it'd feel a whole lot nicer if we had the data to prove that this pump is real. Because right now it's all about feeling. This market feels like something has changed. And when you look at when it feels like something changed from, it feels like it all changed on the 31st of December or on the 1st of January, probably just after the tax harvesting season was actually done. And that was maybe when the last of the sellers was actually done. But we don't deal with feeling here. We deal with data. And today I want to look at the data that shows whether or not the markets have basically changed, and whether we are in 2026 moving into a completely new era, and why we are moving into a completely new era, why 2026 could be completely different from 2025. So listen, if that sounds good to you, welcome back. Do me a favor, smash the like button, because that's what helps us get distribution. And because we've been away for so long, the markets don't know, the algo doesn't know that we're back. And so you hitting the like button really helps us get distribution of these shows. And remember, you smash a like, it gets my dopamine going. My dopamine goes, I bring you guys alpha. We've had some amazing calls. Even in this bad market, we've had 2 calls that have actually done 200%, which is actually amazing. Anyway, let's talk about, I'm counting on you to hit the like button, guys. Let's talk about the actual market. So, I don't know what else to say, but other than to look at this day and say, this is amazing. Look how the markets are actually pumping again. Let's look at it for a whole week. It's actually been an incredible week for crypto. Pump is up 41%, Render is up 90%, Virtuals is up 65%. If we move into the second 200, 100 to 200, look at some of these moves. So it does feel like something has completely changed. And someone once said to me when I was looking at markets and I was trying to determine when things change in markets, or when downtrends actually become uptrends in markets. And the answer to that is that downtrends turn into uptrends when the sellers get exhausted. So you're in a downtrend until such time, or for as long as you have sellers. And once the sellers get exhausted, then the downtrend actually turns into an uptrend, right? And if you categorize the period from the 10th of October, arguably, if you look at Bitcoin until the 10th of October, what you can say is that actually we were in a bull market. Up until the 10th of October, we were very much in a bull market. We put in higher highs. In fact, if you take the performance of Bitcoin in 2025, and let's just find the beginning. That's the beginning of the year, and you say, okay, well, that's where we started, sort of 91 or 92, and we go up until here. Up until October 10th, we were actually up 37.15%, and that's a respectable bull market, so to say. And if everything else had played out the way it should have played out, we probably could have gone a lot higher. But then something broke on October 10th. I'm not going to address what broke in this video. I think we've spoken about it ad nauseum. And that's when the market structure actually broke. And when I say the market structure actually broke, what you can see is that's when we put in the first lower low, and so the market structure actually went bad. And what happened here in this downtrend was there were a whole lot of sellers. So what were the sellers, or who were these sellers that were actually selling? So I think let's talk about the cohort of sellers, because I think, as Miles says here, he says anyone who wanted to sell had ample opportunity to do so. And I think what he is implying is he's basically implying that, listen, any sellers that wanted to sell are basically out of the market now. He refers to a whole lot of sellers. He refers to the tax loss sellers, and they are indeed one cohort of sellers. And specifically, I think in December, if you look at the December movement of Bitcoin, I think we did have a whole lot of tax cohort selling. Now, what are tax sellers, or what are these December tax sellers? So a tax seller, specifically in December, a tax harvesting seller in December, says that in a year where your crypto is down, in other words, if crypto is up, if you had crypto which you bought at $100,000 and it goes down to $80,000 and you sell it before the end of the year, then you realize a tax loss, and that reduces the amount of tax as a trader that you basically end up paying. And so I think December was characterized by this tax selling. In fact, I don't think about it. I actually ran an analysis here, and you can look at the tax loss harvesting. Basically, in years where Bitcoin actually goes down, in December, a whole lot of people harvest to actually get the tax benefit of the actual sale, right? So the first sellers that are out of the markets are the tax harvesting sellers. But there are a whole lot of other cohorts of sellers that are out the market. Let's go through the cohorts of sellers and look at the cohorts of sellers. The first thing is the high leverage traders. Okay, now those guys are out. If they weren't completely removed on the 10th of October by the biggest leverage deleveraging that crypto has ever seen, then they were definitely removed on the way down here. I think the days of these high leverage liquidations are pretty much, those guys are very much out of the market. If you look at the 4-year cycle believers, so there's a certain cohort of sellers that thought, or that followed the 4-year cycle. They believe that the cycle ended on the 10th of October, and they may be right. Who knows? They may be right. But those guys have had ample opportunity to sell. So in other words, if you thought that the cycle ends at the end of October, then what you can see here is that you've had ample time to sell. You basically you could have sold between the 6th of October and pretty much now. So anyone who was a 4-year cycle believer was sold. Then there were a whole bunch of forced sellers after the 10th of October. What are these forced sellers? People who had a lot of leverage, people who lost a lot in leverage and had to sell, etc. They're gone. Then you had the tax harvesting sellers. And as I showed you before, those guys are gone. Well, they had to be gone before the end of December. And then you've got another cohort of sellers. Now, there was a theory towards the end of last year that there were a whole lot of long-term Bitcoin holders that were selling, because this was like the Bitcoin IPO moment. Remember, it was those guys that said, look, they were the early investors in Bitcoin. When Bitcoin came to the main markets and to the ETFs, Hardest, do you see on the screen how the Solana sign is not really aligned with the top of the screen? Can you see that? Or is it just for me?
No, it's moved.
Okay, let's move it back, because I can't see the Solana price. And I'm a big bag holder of Solana.
Yeah.
So the guys, the OG whales, the guys that held Bitcoin for a long time and wanted to realize the IPO moment for Bitcoin, those guys are pretty much out, or at least the data shows us that there was a big cohort of sellers here, which are the long-term Bitcoin holders. So the long-term Bitcoin holders were actually big sellers at a certain point. And you can kind of see it actually from here. So if you look from about the end of June 2025, what you can see is that these guys moved, the long-term holders were selling. And why? They called this the Bitcoin IPO moment. They kind of said, look, up until now, if you wanted to sell big amounts of Bitcoin, you pretty much couldn't sell those big amounts of Bitcoin because the market was illiquid. But now that Bitcoin's become more commercialized, and you've got things like the ETF, and you've got institutional buyers and stuff like that, then Bitcoin is now more like a mature asset, like a stock that's IPO'd. And so you had a whole cohort of sellers that actually started to sell. The long-term holders actually started to sell. But those long-term holders have actually stopped selling. And actually, if you zoom into the chart, you can actually see that those long-term holders are actually starting to buy. So it feels like the selling has dried up. It feels like the selling has dried up. And it feels like something's changed. I don't know about you, but it literally feels like on the 1st of January, something in the crypto market changed. When you look at it simplistically on the chart structure, on the 1st of January, we had a breakout from a long-term downtrend that's been going since October 10th. I mean, ironically or not ironically, but from the 1st of January, we actually had the breakout. So something on the charts changed. But that's not the only thing that changed. If you look at some other things that changed, like, so Ash Crypto points this out, and like he talks about this simplistically, but I'll actually show you some of the data behind it. It says, for the first time in months, we saw no 10 a.m. slam, no BART formation, 2 consecutive $450 million ETF inflows. It feels like something's changed in the market. And if you look here, it says, actually the Sunday pump that we had didn't get erased. So what it feels like is, it feels like the market changed on the 1st of January. I mean, it could be coincidental, but I do tell you that on the 31st of December, it's the cutoff year for the one year for fund managers, and it's the beginning of the new year for fund managers. So if anybody was playing shenanigans and they wanted to report the results of the shenanigans in last year and have report a different set of results this year, well, we've basically set them up perfectly for that. Anyway, let's not get into conspiracy theories. What we do know is that things have changed. Now, let's look at simplistically where things have changed. Number one, we've broken the daily downtrend. On the daily, we're now in an uptrend since the 1st of January. The second thing is, and it's albeit by a very, very small thing here, we actually put in a higher high. So if you look at that high over here and you look at that high over here, we actually put in a higher high, and we're getting some momentum into the charts. The other thing that you can look at is, you can look at the US Open sessions, and you can see that we're not selling like crazy into the US Open sessions. Remember, there was a period where we just used to sell every time that the US market used to open. We used to sell, right? Another thing that has changed is that if you look at Bitcoin dominance is starting to drop. I mean, just look at this here from the 1st of January. Look, there's been a sharp drop in Bitcoin dominance from about 59.6 to about, so we've dropped like 1% in Bitcoin dominance. Why am I talking about that? Because it shows you that confidence is coming back. And if you look at the altcoins and you kind of say, okay, let's not look at them relative to the US dollar. Let's look at the altcoins relative to Bitcoin, which is what I've done here. Look at how the altcoins since the 1st of January, which is this chart over here, have actually outperformed Bitcoin. So Render's outperformed Bitcoin by 80%, by virtuals by 54%, etc., etc. What you are seeing here is, you're seeing that something has changed on the 1st of January. But let's look at, that's a feeling, and that's what the charts are telling us. But let's actually look at the data that backs up this indicator, because that data will tell us whether we can expect this pump to continue or whether this pump ain't going to continue anymore, right? We need to see what the on-chain data says. And when I look at the on-chain data, one of the guys that I really, really respect in on-chain data is a guy called James Van Straten. So James Van Straten says the on-chain data looks so much better for Bitcoin. It looks like a completely different asset. Realized cap is ticking higher, approaching all-time highs. Miners have stopped capitulating. Both long and short-term holders are now back, and they are accumulating. So this feeling is now starting to be substantiated by on-chain analysts giving you exactly the same data. Let me show you some of the data that actually, it looks very, 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 very positive, right? So the first thing is the Coinbase Bitcoin Premium Index. For those of you who don't know what it is the premium at which Bitcoin trades on Coinbase. Now, why is that important? Because Coinbase is the US outlet. It's the US institutional outlet. When these guys are trying to sell frantically, the price of Bitcoin drops, or the premium goes negative on Bitcoin. And when these guys are trying to buy frantically, it goes higher. Now, what you can see here is that if you look at the data from around October, these guys were desperately trying to exit the market. And if you look here in the corner over here, what you see is that the premium has come back for the first time, which means that the Coinbase buyers, the American buyers, the institutional buyers, guess what? They back for the first time in a long time, which is a very, very, very interesting and very, very, very exciting thing. Not only that, if you look one step deeper and you look at options data, what you can see is that indeed something actually changed on the 1st of Jan. So that's the 30th of December and that's the 1st of Jan. And here what you can see is that call options are positive options, went up, and put options started to go down, right? So that shows you that the mood completely changed. People got more bullish and people started to buy calls instead of sell calls on that data. Then we look at the ETF flows. And if you look at the ETF flows, you can see that 18th, 19th, 20th, 22nd, 23rd, 26th, 29th, negative outflows from the big ETFs. The ETFs were big sellers of Bitcoin. And when we look at the last 2 days, so there was a net zero here between the 30th and the 31st, there was a net zero. And then here, 2nd and 5th of Jan, $1 billion worth of inflows. So the 2 days that the market's been open has seen $1 billion worth of inflows into the ETFs. Then, I mean, if you want to look at it graphically, you can kind of see that the buyers have actually started to come back on the ETFs. As I said before, the long-term holder supply. Remember, we spoke about the long-term holders that were net sellers. Some people attributed it to this Bitcoin IPO moment. Some people just attributed it to Bitcoin whales selling, etc. Well, long-term holders, as you can see over here, have started to accumulate again. So they've gone from a period from the 4th of July last year of heavy net selling to actually starting to change their position to start buying. And that usually marks the bottom. So if you look here, when these guys start buying, that usually marks the beginning of a bottom. You can kind of see it in most of these cases. So all of a sudden now, you've got the long-term holders selling. You've got the miners who have basically stopped capitulating. And the main thing is that you have got Bitcoin treasury companies and institutional buyers actually starting to come back. So the treasury companies, which were actually net sellers, have now become net buyers for the first time. The institutional demand has basically returned. This is from Capital Investments. So the institutional demand has basically returned. And Charles Edwards says, when the institutional demand usually flips, generally, here's how it looked in the last couple of months. So net, what this shows is that this feeling that we have that something's changed in the markets actually isn't a feeling. It actually has changed in the charts. Like in the charts, when you look at the charts, something has changed in the data, and it's changed for the positive, right? Not only that, I mean, that's what I've showed you up until now is Bitcoin data, and it's very macro crypto data. If you look at the trenches are also back. So the bots are back. If you look at pump fund graduates, so, you know, I really thought we would have changed our behavior, but we didn't change our behavior. The memes are back. So it does feel like, you know what it feels like? I'll tell you what it feels like. It feels like we've been doctors and we had this patient on the operating table, and this patient basically hardly had a heartbeat. So like patient lying on the operating table, 0 heartbeat, no one interested, patient almost about to die, and patient gets resuscitated. And now what we have is we're hearing like a beep, beep, beep. Patient has a heartbeat. Okay, now, I want to say categorically, I'm not a doctor. No, you know that. Categorically, I want to say I'm not a doctor. Even though I must say, I'll tell you a story, Hardest. When I was younger, much younger, I used to go out and tell people that I was a plastic surgeon.
No way.
You know, like a woman used to tell me, well, can you fix this? No, I'm kidding, I didn't do that. I didn't do that. I never did that, and if you were one of those women, I'm sorry. Anyway, let's carry on with the show. We'll talk about the doctor and plastic surgery show. So, it feels like something's changed. The charts are telling you that something's changed, and the on-chain data is also telling you that something's changed. Now, I want to say categorically that we are not out of the woods yet. Okay, we are not here to categorically say we are out of the woods and now the bull market is here to stay. I want to actually show you the important levels that we're looking at now. So the patient has a heartbeat. The vital signs like beep, beep, beep. Now we're going to monitor the patient's vitals. Okay, so for now, we've just got a heartbeat. For now, we are saying that a couple of other things have also happened. We've had a bullish crossover in the stochastic RSI, okay, which is usually quite good. Generally, when we get these bullish crossovers in the stochastic RSI, generally we go up, but we always say generally, but there can be exceptions to the rule. The guy that created the Bollinger Band, John Bollinger, I don't know if you guys follow him on Twitter, but John Bollinger says a little classic technical analysis, near perfect base for Bitcoin USD with a Bollinger Band squeeze and a breakout. The first upside target is $100,000 and the next one is $107,000. If we fell here, it's back to the trenches. So if you look at the Bollinger Bands, and you can kind of, let me make it bigger first. Yeah, I don't know if, actually, I do have, we can actually look at it here. So if you look at the Bollinger Bands here, he's saying, look, we've broken out of the first Bollinger Band over here, and so that the next level is 100 and maybe 107,000. So all in all, kind of looks amazing, right? And he says the same thing for ETH. ETH also has the same pattern. So it looks amazing. All of a sudden, the patient has hope. We are going to tell the patient's family that, we've managed to resuscitate the patient. But don't get ahead of yourself, because we are only in past the first hurdle. And why do I say we're only in past the first hurdle? We are now battling this very, very, very important support resistance level, which is 93 to 95,000, right? This is a long-term support resistance level. Just look at how far back the support resistance actually goes. We've got to get through this 93 to 95,000. And that's why you can kind of see that we went up from 87 to 98 was pretty easy. Now, when we get into 93, you can kind of feel that it's a bit heavier. Why? Because look at how long this level has actually been in play. Look at how long this level has actually been in play. All the way over here, all the way over here. This level has actually been in play. We have to get through that level first. Once we are through that level, the next hurdle is the 100,000 psychological level. So I think if you break 95,000, the next level is the 100,000 psychological level. Then we get into more technical levels. The 50-week SMA, Ben Cowan's technical bull market band is at 102,000, right? So 102,000. We then have to cross the 102,000, which is the 50-week SMA. Okay. Then the next level is the Bitcoin 200-day simple moving average. Now, this is a very tricky one that we have to get over. Now, let me explain to you. People are laughing about the plastic surgery thing. I promise you, if you're single, go out and just say, hey, but don't. You can get arrested for this, just so you know. So don't do it for fun. But if you tell people, hey, I'm a plastic surgeon, you can get arrested in most countries. But if you don't, then a lot of women just show you their proof and say, can you fix this? Can you do that? It yields quite a bit of return, that strategy. I'm telling you, not because I tried it or anything. So Kenny says, I'm the anesthesiologist. Yeah. Okay, so once we break the 95 level and the 100 level and the 102, we then have to break through the 200-day SMA. This one is super, super, super important. I'm going to explain to you why. Because in 2021, as you can see, after we have a death cross, where is my death cross chart? After we have a death cross, remember, after we have a death cross, generally we bounce back. And the level that we bounce back to, Uncle run with banger tips in the new year. So I'll give you some banger tips on altcoins later, but if you want, So after we have a death cross, we have to bounce back and go above the 200-day moving average. If we do, bull market confirmed. If we don't, same thing as 2021, that's the level that we basically retest. So if this bounce continues and we get to 107,000, then at 107,000, you got to ask yourself some serious questions. If we break through the 107,000, back in the bull market. If not, that was the bounce, the last bounce before the bear market. So this would be your selling point. If you wanted to sell and if you were unsure and if you kind of said, look, you might be going down, this is your selling point. Right over here, that's your selling point. 107,000. So 93 to 95, 100 psychological level, 102 50-week SMA, and then the 200-day SMA, which is at 107,000. That's where you want to be. And then from an RSI point of view, you want to recapture 45, but we're pretty much there. We're at 43. So that is pretty much what the charts are telling us. Our patient has a heartbeat. Okay, he's not out of the woods yet by any stretch of the imagination, but at least it's better than we were in December. And if you look at the altcoins, you can see that the altcoins have a lot of the heartbeat. Let me just go back to it. So, the altcoins have a lot of the heartbeat. And specifically, what you can see is that some narratives should actually run when it actually comes to altcoins. Now, let's talk about the altcoins for a second. Should you be buying or shouldn't you be buying? Well, it depends how ballsy you are. It depends how much risk you have to take. Right? As the old adage says, if you should buy when everyone is bearish, and you should sell when everyone is bullish. Right now, everyone is max bullish, and no one that I know has any courage to actually be buying tokens, right? So you kind of want to say, okay, look, if we get through the 105,000, great. Sorry, if we get to the 95,000, maybe that's a good buying point for you. If we get over the 102,000, maybe that's the next buying point for you. If we get over 107 buying point, that's when you basically go all in. In general, I have been placing some high conviction bets. So for example, I placed some high conviction bets on 𝗬𝗂. It's paid off. In front runners, I went and I said, look, Canton. I said, let's buy Canton. Literally, I mean, the guy's timestamped when I called it. So hold on, where is that timestamp? Literally, there's the orange part here is a timestamp of when I actually said buy Canton. Why? Because I'm very bullish the institutional narrative, and I'm very bullish the privacy narrative. And Canton falls into both of those. I wouldn't be buying Canton now, by the way. I think now it's a little bit overpriced. The other trade which I've been watching is Lighter. So you can see again, in front runners, I basically said, look, I said, guys, buying Lighter here. It's only available on Lighter. And I basically told them how to buy Lighter. When I look at Lighter today, I mean, to me, Lighter is a very obvious trade. The reason why I think Lighter is such an obvious trade is because Lighter is a perpetuals DEX. It's Hyperliquid's trading at a $25 billion valuation, and Lighter, which is arguably the number 2 perpetuals DEX, is trading at a fully diluted value of $3 billion. I think it has to have a pump. So I'm long Lighter. I think here you don't want to be too smart. You just want to be buying quality. And again, you don't need to be going all in. I think the AI narrative in crypto this year, if the market runs, is a no-brainer, because this is the year where agents are going to be transacting amongst themselves, and because of this X402, and now there's the other one, the 𝗬𝗎C804. What that is, it's a reputation register, almost, if you want to call it. So the agents know the reputation of the other agents. It says the agents, there is a reputation that other agents can leave immutable feedback on an agent's performance, build a credit score based on track record. So this is the year where agents are going to transact. Now, surprise, surprise, when agents transact, they're not going to transact using MasterCard or Visa. I promise you that. They're going to be using a trustless currency, which has to be a Bitcoin currency. I also think that 2026 is going to be a year of a massive catch-up trade, like a massive catch-up trade. I've been watching the charts, like we can look at the charts of Bitcoin, and on October 10th, Bitcoin basically decorrelated from markets, right? But then I've been watching the chart of copper. And I mean, look at the chart of copper. That's the copper chart. Now, there's a reason why I refer to copper, because see, copper's broken out. Copper's very much in price discovery. There's a reason why specifically I've been looking at the copper charts. And the reason why I'm specifically looking up at the copper chart is because when copper runs, Bitcoin usually has a massive run. So if you look at, do I have that chart here? I don't actually have that chart here. But copper is actually the one, when copper runs, here, look, you can look here, you can see the Bitcoin runs and the copper runs are almost perfectly timed. Now look at what copper's been doing. Copper's been the one that's actually is now in price discovery. So again, I asked you to give me 20 minutes. It took me a little bit longer, but I asked you to give me 20 minutes so I could show you the data as to whether this pump is real or not real. I think the conclusion is that right now we're seeing a lot of signs. The patient is not out the woods yet, but showing a whole lot of positive signs. And I think what we need to do now is we need to just keep watching the data. And I mean, I've been buying all along. Make yourself buy points. Make yourself points at which you say, okay, well, if we do hit the 100,000, if we do hit 102, that's when I'm going to be buying. I do think if it carries on, the altcoins are going to carry on running, and I think that's going to bring us back to good levels. Cool. So that's that. Remember the cost card. So remember, this is my solid gold. It's solid gold, guys. Solid gold cost card. What is it? It's a card where you can actually spend your crypto. So basically what happens is you deposit your crypto, or you link this to a crypto wallet, and then you can use this at any vendor around the world to buy anything that you want. Restaurants, massages, anything that you want. It works anywhere. It really does work anywhere. So when you spend on it, you control the whole thing through an app. And when you spend on it, you get cash back. Like you get up to 7% cash back. Now, imagine you buy a plane ticket for $1,000, you get $70 back. Like bang, into your card. If you want one of these cards, very easy to get. They get delivered to you very quickly. You get a virtual card, etc., etc. Then what you want to do is you want to go to this link below, and you want to go and get your card. And the reason why you want to do it is because from Monday, I'm going to be putting $1,000 into the card. You see, sign up for this month and stand a chance for me to randomly drop $1,000 into your account. From Monday, I'm going to be dropping $1,000 into accounts every single day live on the show. So try and sign up before Monday, and then we'll be dropping it every single day. All right, I'll see you guys again tomorrow. Tomorrow, I've got a very, very, very cool show for you guys. Very good show. I'm going to be dropping it on the other channel. Maybe on the other channel. We'll see. See you guys again tomorrow. Until then, let me just make myself bigger. Trade well, my friends.